All right. Once again, good morning, everybody. We are on day two of the Advisor Network Connect 2026. Really excited to have folks moving with us throughout the day, yesterday and again today. So yesterday, if you joined us for several sessions, you saw we had a good amount of peer-to-peer sharing sessions, both from advisor presentations as well as our study group yesterday. We'll be doing the same again today. And we had some wonderful institutional presentations, and we'll do again the same today. So this is an exciting couple of days for us to share some amazing content virtually. Let's take a look real quickly at the growth of the advisor network over the last 19 months since we came into existence. Incredibly proud of the top number here, more than 7,000 total wealth management professionals as part of our greater community. A real testament to you being, interested in exploring more about your practices and meeting peers. But we're really excited too. More than 250 of you have joined the interactive collaborative platform, allowing you to connect with one another offline, allowing you to share your best practices on a daily basis and participate in our live events, right? And ask the questions you want answers to of each other and of our institutional guests. So a lot of you are going to be viewing this afterwards. We're going to be recording this and distributing it. That's wonderful. How do you get to ask the questions today? You join the online collaborative platform. So if there was a question you didn't get answered, we'll connect you with the folks over at ARC and American Beacon to ask the question afterwards. But in the future, join the collaborative platform. You get to ask the questions live. We do 2 to 4 webinars a month divided between advisor to advisor and thought leadership from institutional partners. We just get to do a whole bunch of it over 2 days in our virtual connect. And then coming up quickly, we're about to finish up our virtual connect today, but then we have our Northeast regional event in Saratoga Springs in early August. We'll be in our 1 day regional meeting out in the West Coast in Orange County in October. And our flagship meeting is November 10th through 12th, half day, whole day, half day out in Las Vegas, allowing an opportunity for some really great content, a lot of fun, collaboration, and certainly a good experience that I hope everybody really enjoys. And so that's the rest of the year. Hopefully, you can join us for one or all of those meetings, and it should be a really wonderful experience. Now, I get to do a little bit of an introduction. I'm going to introduce the firms. One of our very first partnering firms was American Beacon. From the moment that this network was created, they were there to support and kind of back what we were doing. And with that came ARC. And it is one of the most compelling discussions, one of the most requested discussions we get every year. And so I'm thrilled to have American Beacon and ARC with us today to share their thoughts. So without further ado, I'm going to stop sharing my screen and turn it over to Jack to make some introductions.
Excellent. Thank you, Colin. Thank you, everybody, for taking the time to join us today. We're going to have a very detailed conversation about kind of what's going on in the world of artificial intelligence, cloud computing, and the emerging investment trends that we're seeing at ARK Invest. Again, my name is Jack. I am a client portfolio manager for ARK Invest. It's basically my job to know these portfolios forwards, backwards, up, down, left, right. I do own a Cybertruck. My favorite thing to tell people about the Cybertruck is I got it brand new, and the craziest thing about it is it does not have a new car smell. It's more of an Elon Musk. I'm going to be joined today by Frank Downing. He is director of research covering artificial intelligence and cloud at ARK Invest. And I think maybe to kind of kick things off here, Frank, when ARK hires kind of new analysts to the firm, we often hire people directly from the industry as opposed to people with more of a traditional finance or investment background. And you have a pretty interesting background yourself. Could you maybe tell us a little bit more about your prior experience and how that has informed how you kind of look at the world now that you're at ARK Invest?
Yeah, sure. And I do have to say, I don't know how many presentations we've done together, but I've never registered that joke before. So maybe I didn't get it or I haven't paid attention, but it's funny. So yeah, super happy to be here. I'm, as Jack said, a research director for all things AI at ARC. I've been here for over 5 years now. Time has flown. And prior to coming to ARC, like Jack mentioned, we like to build our research team around subject matter experts that have hands-on experience with the technologies that we're covering and investing in, because we think that kind of being engrossed in the technology, especially technology that's changing this quickly, is really important to understand what's really going on. And so that's emblematic of the background of a lot of people on our team. But prior to joining ARC, I was a cloud engineer. So I was working with Deloitte and consulting with firms that have global infrastructure deployments. So I spent a short stint with Cloudflare and then spent a majority of my time working with, it was Facebook at the time, but Meta now, in their infrastructure division. So it's like the most amazing learning experience ever to get to see how a company that supports multiple billion user apps builds and scales infrastructure to support them. And worked on all kinds of different projects regarding capacity planning, how they think about matching the scaling of their applications to the infrastructure. They custom build all their servers. So spent time working on tools to help them manage their budgets and plan. If we use the more expensive CPU, but we cut down on memory, what does that do to performance? And is that going to fit the new Instagram product that we're shipping? Um, Infrastructure was not sexy in 2017. So that's why they had backfilled consultants doing this work instead of their engineers that wanted to work on the apps that all their friends were using. But it's just the most amazing training ground to learn about data center infrastructure, and then so directly applicable to what I cover at ARC, and great precursor to the AI boom that kind of started shortly after I joined.
Certainly. It seems like you got that real hands-on experience at the industry level, and then now you're translating that into kind of the outlook that we have at ARK Invest and where we think this is all going with time. So let's kind of dive into this a little bit here. Let's talk a little bit more about infrastructure to start things off. How is ARC broadly kind of thinking about the overall AI tech stack from chips to platform to infrastructure and software? Kind of walk us through that a little bit.
Yeah, I mean, everybody has their different way of segmenting the opportunities in the AI landscape, and across our portfolios, I think we have exposure to all the layers of the stack and different ways that the end products manifest, whether that's like physical AI in our robotics-oriented portfolios, or digital AI and revolutionizing knowledge work. So the former would be like our ARKQ portfolio, the latter our ARKW portfolio. ARKK has all of it. But the foundation really starts with data centers and semiconductors. Of course, we've seen the investment cycle continue to inflect upwards. I was just checking this. So our overall forecast, if you look at one of the indicators we like to look at is data center systems investments. This is the IT equipment that goes inside data centers, like servers and switches, for example. Um, uh, Total sales of data center systems were about $500 billion last year. We think that could be $1.5 trillion per year or higher by 2030. So we think there's significant room to grow. But where was the industry when we started the year? We have this annual Big Ideas presentation that we give, and we had the industry forecast. Gartner puts this out, was 580 billion. And I don't know if you remember this, Jack, but the first time we talked about this, I said that number is going to get raised up every few months throughout the whole year. I just checked; they updated it 2 days ago. It's now 800 billion, 820 billion. So they've risen they've rose the forecast by what is it, $240 billion so far in the first 6 months of the year since they put it out. That's how quickly things are changing. And we could talk about kind of the downstream implications, because I think a lot of the market narrative right now is questioning the return on those investments. But that's kind of, this foundation. Where is that compute going? It's being transformed, or it's kind of the raw chips and data centers are being transformed into AI compute by the clouds, which you could think of the big three, of course, but then also this growing field of neoclouds that are standing up AI compute around the world. The hyperscalers, I feel like a broken record now, but continue to accelerate revenue. You can look at Google, the fastest growing 83% or 82% year on year in their cloud segment, accelerated from 63%. And that's $100 billion a year business now, run rate. So just thinking of the scale of that, a $100 billion business growing 83% year on year, because they're taking these AI chips and turning them into tokens that we're all consuming now, I think, throughout our work days and our personal lives. The company's building those models, of course. I think we'll cover. I'm sure we have questions to cover the frontier model landscape, so I'll skip over that and then what are these models doing? They're being turned into agents, which is kind of the embodiment of AI in the workplace, especially. And there's a lot of discussion we can have around what that's doing to traditional software and application software. The long story short there is I think the market for agents is really pulling from this digital knowledge work TAM that's a hell of a lot bigger than the traditional software TAM. Software industry revenue has been growing 15% per year on average. Um, Company like Anthropic, like the quintessential example of a hyperscale AI agent company, grew their run rate revenues from 9 billion to 47 billion in the first I think 4 months of this year. That's going from, and they started the prior year at 1 billion. So going from a decent sized software business to bigger than Salesforce, a business that's been built up over the course of 25 years. So
Wow.
the growth rates here, growing that business 10x year on year is astounding. And I think the our house view is that we're nowhere near penetrated on the TAM.
Wow. Wow. Very exciting stuff. Obviously, a huge opportunity, for people to essentially get on the right side of a very compelling 21st century opportunity here. All right. Well, let's drill down a little bit deeper. I always say that at ARK Invest, we are prolific in our transparency and our research and putting our ideas out there so that they can be kind of scrutinized and vetted by investors. And I'd say, Frank, your research on these topics is very topical, given the environment that we're in. I know that you recently participated in several of our brainstorm sessions in back-to-back succession. And one thing I took away recently was calling the companies agentic model companies as opposed to large language model companies. I think that's certainly something to be mindful of. But more recently here, I'd say, as you know, in the last 2 to 3 months, you published a really interesting analysis of kind of the economics of a gigawatt and what that looks like. It's very interesting read. It's got a lot of detail to it, but what are some of the key takeaways that you would share with the audience around that?
Yeah, I mean, I think it's really easy to see the spending getting so large and thinking, oh man, how is this ever gonna be sustainable? And I think, I mean, one thing is it's not like Google just started investing in AI this year. They've been investing for a while, and their cloud operating margins have continued to expand. Now they caveated there will be some headwinds because they're going to rent compute in the short term, but that should tell you the underlying fundamentals are actually pretty strong. And we wanted to go a layer deeper and kind of publish our model on this more clearly to just say what does it cost to actually build a gigawatt? How is that changing over time? And then how much revenue can you generate based on how you monetize that compute? And if you look at the NVIDIA Grace Blackwell GB200 servers, about a gigawatt of that compute costs about $38 billion. If you're building your own power plant, you're in the low 40s, but about 38 billion. And if you look at the rental prices of those GPUs, which notably have been going up, contrary to maybe a year or two ago, the expectation was that all of these GPUs were going to depreciate faster than expected. They're not only holding their value, they're slightly increasing their value over time, which is a really interesting and important dynamic to recognize. Um, but you can rent out those GPUs at current market rates for about $14 billion a year. So you're 38 billion out the door and cash flow 14 billion a year on the rentals. So you pay back your cash investment in 2.5 to 3 years. Um, that's pretty good economics, especially if you keep in mind that a majority of the compute is being contracted out for 4 or 5 year contracts. This is why the largest lenders in the world are willing to backstop these equipment purchases because they have signed contracts from And it's a good question to cover the credit worthiness of these companies because some, like Oracle, are looking a little bit more dicey than others. But these internet scale companies that can backstop with their cash flows. Now, they're we'll cover the debt, I'm sure, in a follow-up question. But to get back to the economics, where does that, who's paying the 14 billion to rent and what do they do with it? It's largely companies like OpenAI and Anthropic, but also other long tail of model companies that are basically training models and then inferencing models and basically turning those GPU hours into tokens. And depending on the pricing and the quality of your model, if you're at frontier pricing, even if you're not, which I think is also a good thing to talk about, but the common misconception I think in the market is that companies like OpenAI and Anthropic are running at negative gross margins when they're serving these models. We've invested in these companies in our venture fund. I can tell you they're not, but you can also just look at the industry estimates. Multiple put them 60% plus. Semi-analysis has them at 70% plus gross margins on inference compute. So you can take that $14 billion in annual infrastructure revenue and turn it around to 30 to 35 billion if you're one of these model companies. So at both layers of the stack, whether you're a cloud or you're a model or agent company, Jack, I love that you caught that. You can the economics work, like the maths. So I think the people who are very concerned about spending either haven't done the unit economics work or they think the unit economics are going to change. And that latter part's a fair point that we should talk about. You know, the Chinese open source models, like, isn't there going to be so much competition that prices collapse and you're not going to be able to pay back this huge capex burden that you're putting out? And I think there's a few ways that I describe it. One would be that well, I don't think we're anywhere close to peak AI demand. If you think of how far penetrated we are in the opportunity, OpenAI recently published that they have 10 million users of their agentic products. These are the products that, like, think of a chatbot as a question and answer, like a much better Google search. An agent is something that helps you get work done, and there's a much higher willingness to pay for that. We estimate $30 trillion in annual spend on knowledge work wages. So the world spends $30 trillion a year. We don't think that that's going to all turn into AI spend in the next few years, but I do think you could see multiple trillions of dollars of spend in the next few years. The global base of knowledge workers is about 1 billion people. So just OpenAI is about 1% penetrated in the opportunity. Say you add Anthropic and everybody else, and maybe we're at 4 to 5% penetrated into the AI agent opportunity. So if you just take today's technology, it doesn't get any better. I think you can roll it out to the other 95% of the world and still see significant growth in compute to power all of those new users. The second is that a misconception on open source models. You could download the model weights, but actually running the model is not free. You still need GPUs to run the model on. And the latest model, the Kimi K3 model that kind of spooked the market and took over all the narrative last week, it's actually not that much cheaper to run than the latest models from OpenAI and Anthropic. If you look at the average cost per task, it costs the same as OpenAI's models while having a lower level of average intelligence across the benchmarks. That's because the list price per token is half, but it's less efficient, so it uses twice as many tokens per answer. So it's a really important thing to keep in mind is that open source doesn't actually mean it's completely free to use. The second thing is, like, whose product are you putting it in? Are you a company that's going to build your own agentic software stack? Some companies will do that. Like, we invest in a lot of very tech forward companies like Robinhood and Coinbase that are building their own agentic software stack inside their organizations. You can just look at how many companies buy Microsoft software versus using their own word processor and tell that the majority of companies in the world are not going to be building their own full stack agent products. So they're going to need to go get that from the marketplace. And who sells those scaled agent products today? It's OpenAI and Anthropic way ahead of the pack because you're using ChatGPT or Claude. Google doesn't really have a workplace agentic product in the market yet. They're just kind of demoing it and slowly rolling it out on the consumer side. So they're probably next up. And then SpaceX with the Cursor acquisition would be the next after that. If you go look at Kimmy's website and you're trying to use Kimmy K3, it looks a heck of a lot like ChatGPT. And if you want to use a lot of it, you need to pay for it. And I'm like, oh, that business model looks a lot like OpenAI's. And remember, the model cost isn't cheaper. So, and you have to send your data to China. And so when I look at this market and you're like, actually think like I get the shock and awe of like, oh man, there's a Chinese model that looks good. It actually doesn't have a lot of ways to compete relative to the products that are currently in the market from OpenAI and Anthropic. I still think like I would be the first to tell you that open source is going to scale and many businesses will run their own infrastructure and use open source just like many businesses use private cloud infrastructure. But those will be the most privacy regulatory centric organizations like the JP Morgans of the world and the US government that use private cloud over public cloud today.
It's interesting in that brainstorm session that I mentioned, you talked about how uh, one type of model is generating the vast majority of the tokens, but another type of model is capturing the majority of the cash flow. Is that kind of generally what you're talking about right there?
Oh yeah, so you can look at OpenRouter as a dashboard. A software that lets you switch between the model that you're using, and they publish the usage data. And if you look over the last 30 days, about 75% of tokens that have been inferenced on their platform have been open source tokens. So a majority of the token volume is open source. But if you look at where the revenue is going based on the average price per token, 80% of the revenue is going towards closed source companies. So it's important to watch the trend and see if the volume is a leading indicator for revenue. Thus far, it hasn't been. But as investors, we're looking at where the economics are going to accrue and where the investment opportunity is. And I would follow the revenue for that over the volume.
Yeah, yeah, I think it's very interesting. A lot of the times when I'm doing these presentations, I'll say price is what you pay and value is what you get. And so companies are going to have to figure out what price they're comfortable with and what kind of value they're going to get for that.
Also, if I was just going to add one more thing, Jack, because it's like I have so many thoughts on this, half an hour is not enough to describe it. But
Certainly.
people will use the argument, well, when will the models be good enough? And I don't need to use the frontier intelligence. And to that I say, well, there's a reason why, ChatGPT has Sol, Terra, and Luna and older models that are much cheaper and much smaller. They already price segment and offer lower cost options. And to the extent the Chinese companies are distilling their models to try and create more efficient versions. They have to get through OpenAI's defenses to do that or Anthropic's defenses. Those companies can self-distill and self-make more efficient models, which is exactly what they do. So you can price select just within their existing products. And that doesn't necessarily mean they're taking lower margin on it. It means the model is actually more efficient so they can serve more tokens per GPU hour.
Yeah, yeah, excellent. It's certainly a very fast evolving landscape, and I think the team at ARC, because of our focus on these opportunities, has the kind of insight that can create value for investors. So I want to try to hit on maybe one of these questions that we get, directly from investors from time to time. Um, and I think probably the more topical one here is we often get questions that center around the topic of AI safety. Is our nation's cybersecurity strong enough to protect our valuable data? What are your kind of thoughts around AI safety and how that's evolving?
Yeah, I mean, is our infrastructure generally resilient enough? Probably not. I think we need to change a lot of things. You can see it with how capable models have become over the last even just 6 months. We published this chart that the time horizon of tasks that agents could complete went from 5 minutes to 30 minutes over the course of 2025. So far in 2026, that's expanded from 30 minutes to 3 hours, I think. So
Wow.
you've seen this explosion in agentic time horizon, and when you can work for longer periods, you could do more complex things like chain together multiple cyber vulnerabilities to break into systems that AI wouldn't have otherwise been able to do. And that's what Anthropic showed off with their Mythos model. Shouldn't say showed off. Cautiously revealed and suggested everybody, major technology and financial institutions in the U.S. government get early access to help build up their defenses. There's a really interesting incident that OpenAI and Hugging Face disclosed last week, which is effectively a new OpenAI model well in training. They were evaluating how good it is at hacking systems. And it was in what was supposed to be a contained sandbox environment. It broke out of the sandbox and then broke into Hugging Face, which is another AI company's servers, to try and steal test results to help it with the evaluation, which is remarkable that the capability is that good. The really good news is, now that I've scared everybody, is that you can use these models for cyber defense as well as for cyber offense. So getting good cyber capable models into the hands of technology companies and infrastructure companies around the world, I think is going to be really critical to help use AI to build defenses as much as the attackers are using it for offense. And this is like a continual pattern throughout the history of cybersecurity, this cat and mouse game of a new technology comes along, like the internet and encryption. And everybody thought, oh, I'm not going to use my credit card online for e-commerce because the hackers will steal my credit card, which did happen in the early days, right? And then we build the right security schemes around it, and now so much of the world's economic activity flows through e-commerce and online. So it's common when you have a new innovation paradigm that it creates new risks. But net, I think the technology is a force for good, and we'll figure out ways to defend against it.
Excellent. All right, I'm going to give you one last question, and then we'll try to take some from the audience here. I think this is probably the question that I get far and away the most. Are we in an AI bubble?
Yeah, you could probably tell how I feel about it based on my comments on the returns on AI compute. But outside of that, you can look at, and investors have reason to be concerned. If you compare this period to the tech and telecom bubble, we measured S&P 500 IT capex as a percentage of GDP at between half to 0.6%, is where it peaked in around the 2000 time. We're around there now. We're a little bit above it, and I think we're probably going to 1% plus based on those numbers that I mentioned in our forecast. So the investment cycle is actually bigger than the internet on that measure. We think the opportunity is actually bigger. So that's
Yeah.
important to keep in mind. But also, how is the market pricing these companies? If you looked at the large tech giants of the day, Cisco, IBM, Microsoft is the only company that's in both of these groups. And you compare that to the Mag 6 companies of today, so Mag 7X Tesla, the peak PE multiple in the tech and telecom bubble, I think this was in the year 2000, was 100 times. So these companies were trading way ahead of future earnings. And it's really the opposite is true. Like multiples have been compressing for the hyperscalers. It's now in the low 30 range on the PE side. So the market is so concerned about a bubble and so concerned that this could be like the late 90s, early 2000s, that it's actually not pricing the companies in the market like that. Um, I think that like OpenAI and Anthropic, if you're looking at the agent layer, for example, those companies relative to their growth rates, and if you were doing a revenue multiple for like how you'd look at private software companies, it actually looks reasonable too. Now, that said, they need to grow into profitability to be able to keep spending, which we think they can do. The one place that I think I probably have the most caution on is the early stage venture side. We've been playing in the venture space for over 3 years now with our fund, and we've seen early stage rounds particularly get more expensive.
Mhm.
And especially companies that have a well-respected founder that's come out of an AI lab, like a former DeepMind person or a former OpenAI person, that's raising at multi-billion dollar valuations with not much more than a white paper. I think, you're going to have there will be venture funds that are tempted because you can put a lot of capital in those businesses, but that's where you're going to see, I think, less value creation and more likely value destruction over the long term.
I think that's a
Certainly.
really great answer, Frank, because I think there's so many questions that were out there, and I'm actually Jack gonna preempt.
Yep.
Unfortunately, we're not gonna be able to take a lot of them now. We're not gonna be able to take any because I think we've used that time. That was an incredibly informative discussion. There were so many people that asked that question you just asked that you got to do it for us in advance. So appreciate you. Kind of feeling the pulse maybe of the group. Frank, that was fantastic. Well done. What I love is that you guys at ARC are capable of taking the big ideas presentation, breaking it down to one or two of many different topics, and obviously going into great detail. I'm going to add one piece as we close. Our own RIA has brought you guys in to do that big ideas presentation with clients and prospects. Phenomenal presentation, and you get so many prospects that come that may not be interested in talking about asset allocation or sort of the traditional discussions. When you start to bring two or three of the big ideas, it usually works really, really well. So I'm going to stop there, guys, and say, Frank, thank you so much. Jack, thank you for hosting and moderating for us. And for everybody that's watching this afterwards, we're going to happy to connect you to the folks at American Beacon and ARC to further discussion. So guys, be well, and thank you for being a part of Advisor Connect.
Thank
Thank
you.
you, Colin.
All right.